What's going on, everyone? This is Jordan with Conquer Trading and Investing, and we're getting ready here for our fun Friday live stream. Bitcoin is on the breakout. We're going to take a look at markets. We're going to take a look at Bitcoin, Ethereum, Cardano. We're going to be specifically taking a look at different time frames as well. The 1 hour versus the 4 hour versus the 8 hour versus the daily. We're going to, of course, look at the NASDAQ and the S&P 500, some trackers such as the 10-year yield, oil, gold, and make sure that we put this piece together. Above all, we are going to trade what is happening and stay on the right side of the markets. It's great to be with you all here on this Friday. Looking forward to another great stream. Let's get into it, everyone. The title of this video, a lot has happened in the last 30 minutes. Actually, a lot has happened in the last 37 minutes. The title of this video was going to be like Bitcoin position long ahead of the breakout. Discretionary traders wait for the trigger. But then we've seen, I'm going to jump to a really small time frame. Let me jump to the 15-minute time frame. You can see what happened since then. Price came back above, is above that trend line, now trading below it. It's really iffy. It's a hard call, right? I'm going to start off on the daily time frame and just first make sure those that are just joining us have the same situational awareness that we have had. All week, we've been watching Bitcoin from the sidelines consolidate into this pendant. We had the lower green line over here, close below it short, close above it here long. And you can see from also at the same time, we'd like to look at this from the CTM 2.0 mechanical edge. And we've been out of the market this whole time. This morning, just 35 minutes ago, we saw Bitcoin enter the market long, and we saw Ethereum enter the market long. Now, the mechanical system is doing this ahead of what would be a discretionary breakout. But I, myself, probably the vast majority of you, we go with the mechanical system. It does crazy things. It's often buying into resistance, selling into support. It does things that go against what a natural trader's instincts would be, but it's hard to argue with the overall performance. But we do have, if I'm like from a discretionary standpoint, it is hard to make the call right now whether or not you're buying this breakout. You know that we looked at earlier in the week of going ahead and placing a line like this for confirmation above there. Look, discretionary trading is discretionary. It's quite subjective. It's not black and white. It opens up the doors for lots of discretion. And you have to use that discretion over here. Before we come back to Bitcoin, let's take a look at what's going on here in the equity markets. And equity markets also, they are pumping over here. NASDAQ up 1.5%. S&P 500 up 1.4%. You're looking at the dollar off. You could see clearly, though, and it's going to zoom out so you get a better view of what we're looking at. It's a Friday. And, you know, do you want to be a buyer here ahead of a weekend? A weekend where lots of people are expecting potentially there to be some type of escalation in the U.S. banking system. But that just makes sense that people are cautious. You know, it's a tough one. You can hear by my tone. It's a tough one. You know, I said yesterday, a close above this line over here that I'm highlighting, this green line, that on the NASDAQ, that would be a good sign that we're resuming out. Today on this Friday, I'm not so sure that prudence doesn't make the call here. If you're a short-term trader, are you already long this morning? Maybe off of the really strong job numbers, you decided that you were going to get long. And for me, I'm going to wait on this Friday, and I'm going to say, you know what? I am looking for a little more clarity before making any type of decision about where I think that we're going next. S&P 500, as we were getting ready to go live over here, I was looking. I'm going to remove this line now so it's less noisy. But I mean, amazing. Off the move of resistance, came right back in and found support on our trend line, our clone trend line. And then so far I think we're in the kind of neutral though. I feel like we're in no man's land. And on this Friday, I think that's a good place to be, is just kind of waiting for a further, let's say, for a little more clarity. You know what you want to do here, and look at this. Do you see that price is consolidating here, going sideways? Do you need to force a trade right now? By the way, consolidating under resistance, that is oftentimes quite bullish, especially when you are moving in an uptrend, knocking off repairs. You know what? The only caution I could give here is we've now held this line twice, right? A close below it. That's when I would say that, well, you know, we had this sell impulse that occurred. You see the purple line over here, the sell impulse that occurred, right? We still have the resistance in play above it. You know, getting back over here, I would say this is getting ready to resume down off that sell impulse. At the same time, and I know that, well, this is where I'm at. I feel like I'm in no man's land, kind of neutral. I could also make a bullish case for this. And I say, well, consolidating sideways here underneath the resistance. That's, you know, we see this wedge breakout consolidating here underneath the resistance. It looks good to me. Let's give it some time. Let's wait and see. The only one thing concerning that I see today, as I look here on the right with all of you, is that while we're seeing equities running, NASDAQ, crypto running at the same time, I'm seeing yields rising. And are yields rising potentially because of that good, strong jobs number? Is it potentially saying that, you know what, the June meeting is a live meeting? Now, June 15th is a long time away. We still have another non-farm payrolls ahead of us. We have 2 CPI. We're going to get a lot of further, and by the way, because of energy prices last month, I expect the first of the 2 CPI to be strong, not the second. It's going to be quite bumpy. I don't think it's going to be so easy. And I just want to make sure that we stay on the right side. Let me take a look at the June meeting. And yesterday, this was pricing in a 0% chance. Today, a mere 8.5. But we were also pricing in a potential cut yesterday. So subject to a lot of further volatility and change, in my opinion. I want to hear from all of you, discretionary traders out there. We are above, by the way, the 29,000. That's a positive development. It looks like price trying to peak out above here. It's not yet confirmed. The close above here is confirmed, but you know what? It's crypto and you could see some big moves. And if you're waiting for the close, the daily, when I say the close, I'm talking about the daily time frame. This thing could be significantly higher. Now, I'm not trying to cause any FOMO. I'm trying to give you, a discretionary trader, the ability to go ahead and think it through and to see what would your trigger be. Right now, this is not, I mean, in real time, as price was above, anyone saying that you're breaking out, yes, you're right. You know, what's your trigger for the breakout? Is it that green line? Is that your confirmation? You could get rejected right at the line. We could get rejected and roll over here. So more importantly, and about where you're looking for your entry is where's your exit, right? And if you're playing this safe over here, are you looking for just below that last wick down over here, or where we found that support over there? Or are you looking to go ahead and add within here a trend line, drawing it like this and saying and putting your stop loss just below there? As you look for your entry, know where your stop loss is, because depending on where your stop loss is, that's how you will size your trade. The most important thing. And by the way, be very comfortable if you're taking this trade. A lot of people taking a breakout over here long, and we're looking where? On the upside. Well, we have a breakout over here, and you can see the pendant over here, breakout, and where are we going? Like, how much money am I going to make on the trade? What are we targeting next above? I have a little bit of resistance into this area where we just peaked out, right? So, you know, light resistance above here, 34,000. And then we get into real resistance around above 37,000. But I think that you should be, instead of looking about what your possible potential is on the upside, you should be looking about, first of all, where you're wrong, worrying about that. And then as you enter the trade, just assume you're wrong. It's just much easier mentally is it after you take as you take the trade that you just assume you'll be wrong. Because then when it works out in your favor, it's just much easier. So with the mechanical trade and trading over here, you can see that Bitcoin is entering the long side over here. And I know that, for example, my percent profitable, we'll call it under 40%. So I expect 6 out of every 10 trades are just going to end in a stop loss. So I know where my stop loss is on this trade, risking 3% over here, right? So it's just no big deal. It's not like where if I'm a discretionary trader and I spent all that time all week waiting to line this trade up, and then when it triggers, like I want to be right. I want to be right because first of all, I want to make money, and also because I want to kind of affirm that my analyst is correct, that I'm doing a good job here, and that like I want to be right. That is the one piece of the puzzle a discretionary trader could learn a lot from a mechanical trader in a mechanical system. A discretionary trader should want to affirm his analysis. He should do it in such a way that he understands what is expected, he or she's expected win ratio is, and treat each individual setup as just another trade, instead of hoping and trying to be right each and every time. You will find out that you do much better. That's enough hitting on that topic over there. And then we have Ethereum also upon entry. Ethereum, by the way, mechanical traders over here, it's just want to point out to you about an hour and 45 minutes to signal period, there was no sign of a pending long. About 30 minutes or so, you saw a pending long trade trigger. And then that went off. And that was off until the last 30 seconds before the signal period. 30 seconds before the signal period triggered, you saw a enter pending long kick back on. And then as soon as the trade triggered, like almost instantly, price then rose up 2%, now just off, 1.5%. But what I'm trying to say is that a mechanical system is something that is black and white and rule-based, and you have to stick to it. There's no front running, and it's waiting for the close. If you have criteria and the signal, that is when the trade is taken. It's nice to see both Bitcoin and Ethereum long over here. And with the whole caveat, I have to be honest, I don't know whether or not these two trades here wind up going anywhere. And at the same time, I also don't care. I am not attached to any individual result. I don't know whether or not both of these are going to stop out or one of these is going to go on to be one of the bigger trades. You just never know. And that type of detachment means what? That I know I have an edge and that I trust in my edge. And I know that by taking each and every trade, that gives me the probability of going ahead and continue to continuously over time build those new account highs. Take that type of attitude, put it into your discretionary trading, and you're going to do a lot better. If you took this trade and you have your stop loss in the market, that's all you have to worry about. Leave it alone, right? Trust in your analysis. Wherever you put it. By the way, that's a good look. You see that what I'm doing over here as I know that 29,000 is a big level, right? So price closing below there, that's not such a good sign. And then I have the trend line over here, and then even these two wicks over there, a stop loss right where my mouse is, somewhere around 28,600. That's where I would place my stop loss. And then I would manage the trade off of it. By the way, that's roughly $900 to the upside, right? What are you targeting over here? Looking to see if we are able to make a move first, potentially into 34,000, right? I would be taking discretionary into the first local high that we just hit at 31, a very small piece off that trade, even bigger percent off into 34,000. And then I would be looking to potentially, following the price action, look for a breakdown above that into that 37, 41,000. The risk to reward on that trade is such that if I get stopped out on this trade, it doesn't matter. I'm trading correctly. That is what we want to look for. Is that a rising pendant? So rising wedges are bearish, right? I'm going to show you a rising wedge just so we get that view really quick. So I have it queued up somewhere. Like this is a rising wedge. That's a bearish pattern. Now, it's only a bearish pattern if, number one, it breaks to the downside. And then when it breaks to the downside, it continues to hold and follow through. Again, even like this is a downtrend. That is a rising wedge. If it were to break down, that does not in any way, shape, or form have any type of known outcome. And once you get rid of like trying to be right, and because you're going to do really well if you understand, first of all, some basic TA, and more importantly, how to manage your risk around that, how to size your trade, what type of risk reward you're looking for. And just because I, for example, have, and I could say on my mechanical trading, I have on Bitcoin a 5-to-1 risk reward. On Ethereum, even greater. That doesn't mean that my take profit is 5 times my stop loss at all. It just means that over a set of trades, that's what it winds up being. It's the same thing with your discretionary trading, meaning that like even if you have a 2-to-1 or a 3-to-1 or a 5-to-1 risk to reward, that just means that some of your trades, and it's going to be very few of them, a small minority of your trades that go on to make a majority of your profits, because you're keeping your other trades small wins and small losses. That's how it works out. All right. So this is a rising wedge. That's a bearish pattern. This is a pendant on Bitcoin. I don't think that's a rising pendant. I just think that's a pendant. And I could also make the case that that is also looks to me like a bull flag. If I wanted to, I could just take the top resistance line and I could put it off the bottom here. And someone might say, well, that's a bull flag. And I would say to either one of you, maybe, I don't know. All that matters to me is this upward sloping trend line resistance. A break above that resistance, that signals a resumption of the trend. And that's what I manage my risk off of, that. All right. By the way, 36 thumbs up. Anyone who's here today, thank you for going ahead, hitting that like button, smashing the like button. If at any point in time you are able to appreciate being here, learn something, or whatever, just feel like spreading some positive vibes, please take a second, especially if you're on mobile. I know it takes a bit of, it takes a second. Hit that thumbs up. Really appreciate it and grateful for it. I want to move over to this when I said we were going to talk about different time frames, the 1 hour versus the 4 hour versus the 8 hour versus the daily time frame. Where would you put your stop loss if you, well, Jose, let's take a look at it. I don't have any work up on Ethereum done, so we're going to do that here together live and we'll figure that out. Some people looking at Ethereum, wondering what's going on. So this is kind of a naked chart, right? And I'm going to do just one thing over here. I'm going to just take this trend line I have. You ready? Starting on the daily time frame. I don't really like to work off the daily time frame. Let me come down to the 8 hour. And really what I like to work off is the 2 hour time frame. But let me just go ahead and start over here. Head snack, fun Friday, big shout out. And I'm going to go ahead and I'm just looking and I'm just seeing. Do you see what the 3 things that I just did? I'm showing myself that, well, seems to be the market structure, right? I checked that out down over here. I checked off over here. And then I'm going to go ahead and line it up over here off of this wick over here. And that was almost a breakout, right? On the 2 hour, that might have, got a lot of people caught off sides. So honestly, what I would do though, is after that wick and no trade triggered over here, I would then probably be looking to move that up over here. And then you could see this is the first close over here, right? We just took the trade way up here. Let me just see what my, 1957. 1957 is way up here, and that's not bad. Let me come to the 8-hour. Let me show you why. Because that's a little late. I'm not gonna lie, that's a little late. And don't get me wrong, like I told you, CTM 2.0 is always doing crazy things compared to a discretionary trader, always and forever. And I could say, well, that I'm okay with that. Like coming back and looking at since 2020. All right, that's a really good drawdown. It's a really good return. What about 2023? I mean, we're on the right side, 25% gain, 13%. Some of these guys told you to put your money into some short-term treasuries because you can't do better than 5% a year. We're just getting started. We're into May over here. Last 2 years, nothing special about the price action. And okay, it does crazy things. I just want to make that point apparent to you as I'm saying that this entry here for a discretionary trader is a little late, and the better entry would have been over here, right? I could see this trend line breakout. I showed you how I got that trend line, and then at this wick up here, that would have been on the break probably, and as authentically as I could tell you where I would be looking for a buy entry over there. Where would the stop loss be? Jose, let's do a lot of what we just did, and let me just go ahead and add a simple trend line like that and just say as long as that trend line holds, that's where my stop loss should be. Right around over here, I'm going to say it's somewhere around $1,887. I think that's a good place to put it. And again, it's very subjective and it's very discretionary. That's why it's called discretionary trading. You might have to figure out where you're putting yours. And you know what? Like the safer you are, for example, when I say safe is, I mean, that's a good place to put your stop, but someone else might be looking at that chart and they might say, well, you're putting it right at that last bit of resistance, which was support, and price could come and tag that in and be okay. And I prefer Jordan to go down off of that last swing low, and I'm going to just put it, $20 lower than you at 1860. And I think that's safer, and likely your win percentage might be a little bit higher. Now, if we're both risking 2% on that trade, right? My position size is bigger than yours, which means that on the upside, I might be making a little bit more money, which means though, even though that your win percentage is actually higher, my overall profitability might be higher. So there's a lot of things to think through, and there's no right or wrong. It's discretionary. You get to kind of, make up your own mind and decisions and figure out how you want to do it and whatnot. And, but I'm just throwing out some insight to help you formulate how you think the best way to go about it. Now, discretionary traders should formulate a plan. And that plan is not, I'm taking 2 trades a day, or I'm taking 3 trades a day. And if I lose 3 trades, then I'm stopping for the day, or anything like that. And by the way, you're much better off getting on the higher time frames. The 2 hour here, that's a very low time frame, in my opinion. And for discretionary trading on crypto, on Bitcoin, Ethereum, I like it. I think that 2 hour is the way to go. But you should not get lost in the 2 hour. So you should start on the daily time frame, because you could see that. You could say, wow, price is not going really anywhere. We've just been consolidating over here. By the way, this trend line that I have down off the bottom, I'm going to go ahead and just move that off the top over here. And we might be breaking out. We had a close above it here, and then we got rejected. And then a big move off over here, we got rejected. And look, I don't know why this happens, but these trend lines, look at this one. Now I just put it over here. I don't know why that happens across assets, but it does. And you could use it as a really good place to manage your risk off of. For example, if you did take this trade on Ethereum, you might be looking at this as a place of resistance where you might be looking to take profit into, or at least a piece off. But that's a little bit of awareness. And Jose, that is a freestyle look at what's going on here on Ethereum and where I would place my stop loss. And This is the type of stuff that I thrive off of and I love doing with all of you, you know? So go big. I mean, it's one of the most important lessons in the market. The thing is, Soros, by the way, is notorious for teaching Stanley Druckenmiller, when you see it, you go big. By the way, Stanley Druckenmiller is notorious for being able to change his mind at the snap of a finger. And that makes a great trader. Now, a very bad trader keeps changing his mind like this, flipping, flopping back and forth, and over trading will destroy you and your account very quickly. Go to the higher time frames. You're going to do much better. Take less trades, which means staying out of the market until something develops, and you're going to do much better. Is now the time to go big or go home. So I remember during the March 2020, by the way, we were live on YouTube throughout all of that. That was, we crushed it. When the market was crashing, we were early. We were positioned well, shorting equities, specifically the S&P 500, holding swing trades into position trades against the Australian dollar and New Zealand dollar commodity currencies with risk off currencies, Swiss franc and Japanese yen. And it was absolutely beautiful. And then on the way up, being one of the first to say, no, QE is uber asset inflationary. There's actually no more selling of anything. Why the macro heads were telling you, look out for some insolvency event, 2029, here we come. It took them about throughout the summer to realize that we were now headed upwards. So boom, bam, beam. What I was trying to say is, Ace, during that period of time, though, I remember BitMEX going into a liquidation loop. BitMEX was the largest Bitcoin exchange at the time. It had the most volume, and everyone was just getting liquidated, and it became this negative feedback loop. Price just went straight down, and I remember getting money onto exchange, waiting for it to go on there, and going big, and going really big. That was a Soros moment. Those don't happen too often. And the more time that you spend around, the better you'll be able to recognize them. Ethereum, Bitcoin, the market's here on this Friday, green. I mean, so when you all look at this, do you see that we are coming into resistance? And even though we're seeing really green price action today, are you bullish, cautious, or what here? You can't be bearish. There's nothing to be bearish about. By the way, this line over here, if it breaks, that's a sell impulse, and you should be getting ready. I just highlighted the wrong line, but you get the idea. Then you should be getting ready to be getting bearish, but that's not happening. But cautious is a good thing. So let's take a look at this. Let me jump over. And I love, by the way, it's very rare that it happens when you enter a trade and right after entering that trade, that all of a sudden you get that nice, beautiful swing momentum and price tumbling in the direction you took it. I could see Bitcoin coming into that resistance that we talked about from a discretionary basis. You might want to see that cleared before you look to enter, right? There's nothing wrong with picking your spots. Better the right. So with the dollar sign, better a little late than too early without any confirmation and just throwing darts in the dark. Much better really lining up your shot and then waiting for the right moment. You just don't see your prey and just fire off shots, right? You hold that arrow back and you wait and you wait, and then you get your breathing set for the release, and then you line it up and you nail it. This is the best. But that shows that that's someone who's extremely experienced and mature, Jeffrey. So I'm glad you added that to the conversation. Now, let's take a look at this. Jordan, I hope you're doing well. I listen to your live streams daily. Replay crew. Big shout out to everyone on the replay crew this Friday, this weekend. Big shout out. And you could always count on a thumbs up from me. Whenever you mention busy physicians, I smile. I was supposed to be semi-retired this year, but life is still hectic, but less busy. I still see about 160 patients a week and do about 6 surgeries. Surgeons, busy moms, daily time frame is a great place to be. Now, I think that we're a little bit more active here, so let me continue over here. Even though is massively busy schedule, I think that we're a little bit more active, so I'm going to go ahead and read the rest. I'm not active on the Discord because of lack of time, but I do have an idea for the problems of the CTM on the 8-hour. Have you and your team consider adjusting the 8-hour period to make it more manageable at night? For instance, in Texas, the typical 8-hour period is 7 p.m., 3 a.m., and then 11 a.m. So the 7 p.m. and the 11 a.m. are no problem, but 3 a.m., come on. You know, I need a little bit of sleep. I have 6 surgeries a week. I'm seeing 160 patients. My hypothesis is that the 8-hour strategy is more profitable than the daily because it has a shorter duration, right? We have strategies in place on the 8-hour time frame and on the daily. The daily time frame is extraordinarily profitable compared to anyone else, but the 8-hour is significantly more profitable. I therefore imagine the 2 or 4-hour period would probably be more profitable than the 8-hour. If my hypothesis is correct, then my following suggestion may be invalid. My man, it's not just like this is what I believe, so therefore it's going to work out to be true. He's like, look, it's just my hypothesis. And if that's incorrect, then this suggestion is not going to work out. There is nothing magical about noon, 8 p.m., 4 p.m. Eastern time. Can we not assign the 8-hour period to make it more convenient for those trading? Perhaps we can set those periods to 6 a.m., 2 p.m., 10 p.m. We can do it Eastern time for those in North America and 6 hours ahead for Europe. I'm not sure if TradingView allows, it does not, custom set periods for my suggestion. Not that it doesn't allow custom periods. You could set it down to the minute on custom periods, but as far as what time the bars start and end, just wanted to get this idea out. Now, let's check this out over here. We got over here, and this was, look, the 8-hour time frame is dialed in. The daily time frame is dialed in. The 1 hour and the 4 hour, they're not dialed in. I'm going to show you why. This was work done on the 1 hour and the 4 hour. All right. So it's not like it's not dialed in at all. It is dialed in. This is just to give you some perspective, and I need to start over here on the daily. Where is it pulled up? We'll figure it out together live right now. All right. So we're going back over here to 2020, right? Now, the problem with that is on the 4 hour, I could go back to 2020. On the daily, on the 8-hour, on the 1 hour, we start in 2021. Let me just give you an idea, though, of how the daily has performed going back to 2020 versus the 8-hour. So the 8-hour outperforms the daily. Both are significantly great. The 4 hour, though, is actually not performing as well as the 8-hour. It outperforms the daily. You see that? But by the way, 4 hours is how many signal periods a day? 6 signal periods. Now, I know everything could be automated, but automation, there is an extra degree of risk. After the API hacks last year, I am not comfortable with. Manual trading on the daily, super easy. Manual trading on the 8-hour, easy. 4 hour, that would be difficult. And the overall performance does not warrant it, right? Compared to the 8-hour or the daily. But let's look at, now we could go back to 2021. And what's neat is I want to show you as you're looking at this, as I scroll here in the upper left on the 1 hour time frame, watch where the crosshair is on the daily. All right, so you could see that right here we're in an uptrend on the daily, and the 1 hour is attacking only on the buy side. And now as the daily is actually neutral, we're still attacking on the upside, and then they both start attacking on the downside. But since it's the 1 hour, it goes, why this is just attacking on the downside, this is attacking on both sides, right? Throughout all this period. By the way, the 8 hour, you could see the different relationship, and the 4 hour. Now, from 2021 until the present, the 1 hour has a performance of 259%. It's got a massive drawdown, though. The 4 hour has the same return and a much less drawdown. So you would think that the 1 hour, because it's a smaller time frame, might be more profitable, but actually what's happening is the higher time frame is filtering out a lot of noise. Also, commissions make a difference. The more trades you take, look at the average trade here is 1.32% versus 0.84%. Now, at the same time frame, the daily is actually outperforming by a small little margin of error, and look at the average trade is much greater than on the 4 hour on the daily. The 8 hour is significantly outperforming them both, right? You could see the 8 hour performance is really much better than the 4 hour. I mean, why the net return is there, the drawdown is too high on the 1 hour. The 4 hour, it's good, but the 8 hour significantly outperforms. And the daily not only outperforms it is much easier to trade on the daily than the 4 hour. In 2022, this is just from 2022 to present, we have a 65% on the daily time frame. We have on the 1 hour a 155%. Now the drawdown looks a little bit better. You could see that the 1 hour and the 4 hour are close, but the 1 hour is outperforming it. But the 8 hour here for drawdown and overall return, I mean, listen, the 8 hour is more consistent. It's more profitable. It's the reason why we trade it, is because it is, for whatever reason that I know of, the most profitable time frame for us to trade. If it were anywhere different or for any reason, then we would gravitate towards it. Now, I think there's another solution, and that solution is because these returns that you're looking at, this is going back to 2020 on the daily time frame, and the 8 hour time frame are both significant. I think that the best solution here is, because if we could do something like you're offering, and that is have the choice of when those signal periods begin, that might be very effective. But I think simply using 2 of 3 signal periods is likely going to be even more effective than the daily. So we have 2 major options for those that are very busy, right? Moms with raising families and children, doctors, and a whole host of other things going on from other people. The daily time frame provides a significant solution, and it takes a little bit of time and a little bit of patience. In the 8 hour, even more so. I think a marriage of these two, when using on the 8 hour time frame, 2 of 3 signal periods, that likely is going to provide better returns than the daily and be the next good solution. 37 trades in 3 years. Take it back further, right? Let me do that over here. Let's get into this a little bit, but here on the daily time frame on Bitcoin, as we were just looking at, let's go back a little bit further. We were just looking at 37 trades in 3 years. What happens if we go from the top of the bull market? So we're adding in 2 bear markets and a 60% return. We're looking since 2018, over the last 5 years, 74 trades. 74 divided by 5 is 14 trades, a year. And the drawdown and return are immense. You don't need to do that on the long and short side, because that's still an intense return. Don't forget what is required to get it done. Look at that drawdown. Look at all those people working so hard out there, right? And like, do you want to trade more or do you want to make more money and have a better life? Really let that sit with you. There are some people who are really in it for the action, you know, and there are other people in here that are looking to transform their state of life. And one requires being very diligent, disciplined, focused, and the other is, you know, working really hard, and you're not keeping pace of the others. So that's that. That's the best way I could answer this question. I love the thought, and I don't claim to know what's best or have the truth. My own personal opinion is that it's not the smaller time frames that are more profitable. It's indeed the 8-hour that is the most profitable. And that using 2 or 3 signal periods, just ignoring the night, and we'll back that up with data. We'll do that next week, is going to be, we'll do it next week. That becomes my focus next week. Mom, she's leaving us on Monday. I have a massive amount of more time. I mean, what, 6 kids? Come on. We have all the time in the world. No, I'll have more time to focus in on that. I know Flav vs. Frav has already done a massive scout ahead and a work into it. And, you know, that's why he's on the summit team. Incredible work. And we'll take it up from there, and we'll be looking into that much more. And Patrick, that type of less is more. We're in it for the more. It doesn't mean we want to work harder, work smarter. And like everything you do, even if it leads nowhere, is very valuable. For example, the time I spent on the 1-hour time frame, even though in the end, for us, it's useless, it still provides valuable insight into what we're looking to accomplish overall. And that's very important. And it is potentially possible, by the way, with things like moving stop losses, that something like the 1-hour time frame might even be more profitable, even when factoring in number of trades and commissions and everything like that. But that's an unknown. And, you know, when we get to that peak, we'll be looking into it and at it. But as far as I know, this is, you know, what we implore here is the best way for us to be going about. I'm looking at the dollar here with you all in the daily time frame. And, you know, we were looking at this yesterday and just saying, like, good job not buying into it, and how we were kept safe. But that's a nasty looking candle that we're looking at today. That's a nasty looking candle. And next week we could see a further escalation of the dollar. And we'll take a look at what's going on elsewhere. We saw that Ethereum here, right, is currently holding a short trade that is minus 7.8% into profit. That's going to take it on the year negative. Currently on the year since 2023, 5% into profit. A loss here, and I don't know what that will be 6.5 hours from now. It could be significantly even greater. We'll set Ethereum back for the year. 9 trades, lots of trades. Just to give you some perspective, though, on Ethereum here, you know, give it the last since 2022, and that's a pretty good return. That's a pretty good drawdown. And in, you know, since 2021, you could see that's outperforming what Bitcoin has done, as it does on the 8-hour as well, since 2020. So what I'm trying to make the point, what about since 2018, George? What I'm trying to point out to you is you can't get caught up in the first 3 months of the year. Fighting for break even is a good place to be, because you are, and as I know, look at my percent profitable, 22%. What does that mean to me? Well, I know that over a larger period of time, that my percent profitable should be somewhere closer to just under 40%, right? So if I have in 2023 a 22% win ratio, that means that likely the volatility is not there. Look at that. You see that short range we're in, right? It's going to open up. And when it opens up, that's coming sooner than later. And then I'll be there. You can't be thinking, if you're on the daily time frame, about the last 3 months. Bitcoin has had a good few months, right? Up 34%. Not Cardano. Cardano here is negative on the year. This is the daily time frame. Negative 20%. Percent profitable, 0. Well, what's my expectations as far as percent profitable on Cardano? Cardano, right? Well, it's a lot higher. That's going back since 2018. What about the last few years? Percent profitable, that's still just the same. What about the last 2 years? It's the same. So I'm running on 0 in 2023 over these last 3 months. It's a good thing. That means pretty soon, from the way I look at it, likely by the end of the summer, or maybe not, maybe it's the fall, but likely by the end of the summer, I would not be surprised on the daily time frame to see both Ethereum and Cardano roaring into the bliss, making new account highs. Look at this. Your past doesn't define you. It refines you. Boom. All right, that's our gold. We can see gold today, and gold off of the strong jobs numbers and economy. By the way, really weird. We saw revisions of the massive job beats in March and in February, showing that those numbers were wrong. Sorry, we were wrong, and that actually they would have came in weaker than expected. So what you make of all of that is anyone's guess. For me, it's about, is that trying to like keep the headlines going? You know, anyway, all that matters though is staying on the right side. Nothing has changed. This is the monthly chart on gold. Nothing has changed yet. Where would a breakdown be? We did look at a breakdown yesterday. It's over here. This is gold on the weekly time frame. We have this trend line in over here. That's a sell impulse. That's what we need to see, some type of breakdown. What's happening today, what's happening yesterday, all thus far is noise as far as I'm concerned on gold. Silver here continues to look good as well. It's had that trend line break, retest, and now looking to resume off. Where's a breakdown on silver? Is that similar to what we're looking at on gold or different? Let me go ahead and take a look at it and dial in. And what I'm looking for is to find any type of symmetry of the market, of where it is. Let me start here. Maybe I'll get lucky. I don't think this is going to be it, but it sure looks like it. Sure looks like it. So I'm looking for a breakdown, where a breakdown would be. And I could say that, well, this would be a breakdown, and that's probably right. But this would probably be for this overall, like, moving that's happening in silver, right? CTM, I know live, we took this one off of the gold and then take the take profit somewhere over here. We were looking at it like a swing trade at the time. If we were looking at that as a position trade, I'd rather have been holding that, waiting to see if we break outside of this massive cup and handle. That's not the way it was done at the time. So silver, I'm trying to see of where any potential breakdown would be. And that line is when it ends, the overall trend. So now I'm looking for like in the closer to the market, where we might be looking for, I'm going to just go over here, right? If we break down off of that trend line, we're still fine. We're still coming into a massive area of support. Getting below this breakout of this trend line on silver, that would likely be bringing in a test of this area over here. And if that breaks, then we are rolling over. But that, I don't know. I mean, that's not what we're seeing yet. I'm just preparing for the future. Look, I'm just the guy who really enjoys spending my time with all of you, sharing in our passion for the markets. And, along the way, if we could really do our best to continue to look at this all as a gigantic journey where we're continually learning and we're compounding knowledge at the same time we compound our accounts, that I think that we will have the ability over not only the next decade, but the one after that and the one after that. And by the way, for as long as I live, I will be heavily involved in the markets because it is an absolute passion. And some people out there, as soon as they retire and start hitting the links, they grow bored. And, like the challenge that the markets offers is a beautiful way to keep ourselves active and sharp. And we were so close. It's this Friday. Thanks for being here. Joel jumping on the replay crew. 98 likes. I appreciate each and every one of them. If someone, though, watching this on the replay could get us to 100, that would be awesome. And greatly appreciated as well. Everyone else, have a beautiful, beautiful weekend. Have a beautiful weekend. I'll see you all on Monday. We'll be refreshed, strong. I might not be so fresh. We got, all the family visiting us here this weekend. But next week, we're gonna dig in and kick it off in a big way. Have a beautiful day, everyone. Most of the money seems to be flowing also into the Euro Bitcoin over the DXY. Interesting. CBK, I'm just going to favorite this and take a look at that and do my best to absorb it. 100, boom, Silver Patty. Everyone, have a beautiful weekend. Really, really, really. And look, the most important thing, trade what's happening. Have a plan. Trade your plan. If you don't have a plan, make your plan to watch regularly our live sessions, because I know realistically 3 or 4 months from now, you're going to be having a lot of clarity about what you need to do in order to get it done. Is today Cinco de Mayo? That's fantastic. I love it because I have my whole family from Mexico here at the house. And, they're like, Cinco de Mayo is not a big holiday. It's not a big holiday. All you Americans, you guys go out there and you buy you have the big celebrations and the margaritas and the salsa. We don't even celebrate Cinco de Mayo. Oh, I mean, that's not true. In Mexico, the schools are closed for the kids. The Battle of Puebla is a big deal. But happy Cinco de Mayo, everyone. Lots of love. Have a great weekend. I'll see you all on Monday, and we'll make sure that we get more. Take care. God bless you.